Well, I tried. I tried to reach out to my good friend Donnahue George on phone and on Twitter this morning to help answer some of his questions about how did AMC burn $250 million in cash in Q1. And since I couldn't get a hold of him, let's just go through his questions on video and a couple of answers with data. And I hope you guys find this helpful.
The AMC earnings report came out. The numbers they were great. They beat expectations. They had less debt. I mean, what is there to say? What is there to say? Here's the problem I have with that earnings report. We have $260 million less cash at the end of 2004 Q1 than we had at the end of 2003 of quarter four.
$260 million, pretty close, almost exactly correct, Donnahue. But AMC does count both cash and restricted cash on the balance sheet when they're comparing the cash position from a previous quarter to the current quarter. So when we look at both of those numbers, cash and restricted cash, the change was $250.7 million. And I know your next question is going to be, what is restricted cash? And that is a great question. In the 10Q, it does tell us that restricted cash includes cash held in the company's bank accounts as a guarantee for certain landlords and cash collateralized letters of credit relating to the company's insurance and utilities programs. And I apologize for interrupting you so early in this conversation, but if we are going to be looking at numbers and data, in order for everything to line up, we want to make sure that we have the right numbers. So $250.7 million. Now let's get on to the next questions.
Now you guys tell me, where did that $260 million go? We sold a whole bunch of shares.
I'm just going to stop you. I'm sorry, just stop you one more time. I know it seems right like they have been selling, AMC's been selling a ton of shares, and they have over the past year or two. It's getting annoying, right? But in Q1, the one we just finished, they actually did not sell any shares, not any at all. We can see that here in a summary of the financing cash flow. Here I have marked in pink that there was no sales. The green is every quarter that they did sell shares. And you can also look this up in the company's 10Q.
We made money off the popcorn. We made money off the candy. We had all this revenue coming in, yet we have $260 million less than we had at the end of 2023. When I tell you guys that we need to get a forensic accountant to go through those books, we need a forensic accountant to go through those books, because I don't see where the money's going. I do not see where this money's going, and I'm sure just like I'm concerned, there are other retail investors who are concerned also. They want to know. I mean, it makes no sense to me. And to make it make sense, Adam Aron should release a budget to show us how this money was spent.
All right, I hear you. Yeah.
I would like to see how the money was spent. I would like to see how we went from $864 million to $604 million over the course of 3 months.
All right, got it. Budget. You want to see a budget of how they're spending the money. And that makes great sense, Donnahue. I'm glad you asked. Is there any other questions, anything else at all that you want to know related to that budget or how they spent the money?
Okay, is it mismanagement? Is it bad spending? Is it straight up fraud? I don't know. But I think Adam Aron should show us the entire budget for the quarter.
All right, I think I got it. You want to see if there was any budget that they could share with us so that we could see with our own eyes. Is it mismanagement, bad spending, or straight up fraud, right? I think I got all that. And to answer your question, actually, yes, there is a budget that they share with us both on their website and in SEC filings. Let me throw it up on the screen here. It's called the Statement of Cash Flows. And in a 10Q or in a quarterly filing, there are 3 statements that I want you guys to read every single quarter, because it's going to take a lot of these questions and answer them for you. We got the income statement, the balance sheet, and the statement of cash flows, which is your budget of how the cash is spent every single quarter. You'll notice up at the top, the very first line entry is the net loss, $163.5 million that came from the bottom of the income statement. And then we have a lot of additions and subtractions on this cash flow statement for a variety of different items, ending down there at the bottom with that magic $250.7 million. This cash flow statement, Donnahue, is the exact budget that you've been looking for. And I hope that you can look through this and it will answer some of your questions. Where did all the cash go? Line by line, we get to see exactly where the cash went. And Donnahue, I know you're going to have a follow-up question for me, and it is a good one. You are correct in asking this. If the revenue in Q1 2024 was essentially the same revenue in Q1 2023, how the heck do we have a cash burn of $250 million in Q1 2024, but it was only $135 million spent a year ago, when the revenues were essentially the same? The key difference on these cash flow statements from last year to this year, obviously at the bottom we have $250 million gone in Q1 2024, only $135 million a year ago. But the key difference I have highlighted for you in green, last year the company raised $146.6 million through selling stock. And so the cash burn appeared less a year ago. So I know it is confusing, and I'm hoping that this video is helping to clear up some of that confusion about the differences between this year and last year. But at a revenue level of around $950 million, the normal cash burn is $250 million. And really the only way to make the cash burn less would be what they did last year and sell stock. To finish this video up and make sure we're as thorough as possible, we could say there are some other ways that they could have reduced the cash burn. If we look at the income statement, we see that negative $163.5 million down there at the bottom. There are some ways you could lower the loss there. You could look at the operating costs and expenses. You could reduce rent, and AMC is reducing rent by closing theaters. Sean Goodman talked in the earnings call the other day about how the company is trying to actively manage the rent expense, closing theaters as leases finish up. These are long-term leases, but as they finish up on underperforming or outdated locations that are too costly to renovate, they are closing those theaters. 169 since the pandemic began. 169 theaters closed since December 31st, 2019. Now they have added 60 new locations in that same time frame, but a net reduction of 109 locations, or 10.9% of the theaters. And those 60 theaters they added are outperforming on a revenue basis the 169 that they got rid of. And that is the type of positive change that this company needs to continue to make. The other obvious thing that jumps out to us here is the last item I have highlighted in yellow, the corporate borrowings, which is the interest that the company pays quarterly on the debt. When you hear them talking about wanting to reduce that debt, it's because they want to reduce this interest expense every single quarter. For any of you who listened into the earnings call just the other day, Sean Goodman mentioned that due to the debt reductions the company has made since 2022, they have lowered their annual interest expense so far by $60 million per year. So, amigo Donnahue, to sum all this up, all of the budget is here either on the income statement on the items that I had highlighted there, or on the cash flow statement, which shows everywhere that they spend money. And to you, or to any of the people on my channel who always ask me in the comments, why can't we get a different CEO? He'd certainly do something different. I invite you guys, if you think there's mismanagement or overspending or fraud, to analyze these line items on the income statement and the cash flow statement, and then hit me up with a conversation about which ones specifically you think are being mismanaged, which ones specifically have fraud in them, and then we can have a conversation. But just to generally throw out allegations without having specifics, then I have a hard time having a conversation with you about it. I need to know that you have identified something tangible that we can have a conversation about. Otherwise, I think that any other management team that comes in is going to be faced with these exact same challenges. I hope you guys found this informative. I hope you learned something. I think that I might just do a separate video just on how to read a cash flow statement, because it can be a little bit daunting if you're not used to it. I get it. But we'll save that for another day. Until then, leave me your comments or questions down below. I love to hear from you guys. I am Tony Denaro, and I will see ya on the next video.